I make a living using this simple strategy on a extremely clean chart. Now we will be analyzing the most important indicator for this strategy, and that is the cumulative delta. Now you can set up the cumulative delta by searching for cumulative delta on any platform. However, for this tutorial we will be using TradingView because it is probably the most accessible platform out there, as well as it is free to use. If you want to use the free version, basically the free version will be fine to backtest and do whatever you need to do because you will only be using one indicator. With the premium versions you can add more than 3 indicators, but it's not required. So we're going to look for the cumulative delta. Okay, you can choose any one you wish. I like to select the monster cumulative volume delta on TradingView, mainly due to visual aspect of it. You know, it's more saturated, even though you can edit the other ones to mimic this one. However, the calculation of the indicator is the same as all other ones. It's bid minus offers. There it is. This is all you need. The cumulative delta, when used correctly, can be a very powerful tool. Now, let me explain this to you. The market, okay, consists of market orders, all right, and limit orders. Now, which one do you think contains the most daily volume? Yes, it's the limit orders. And you know why that is? Because the big players use limit orders. You know, these financial institutions do not execute ever via market orders. Most people tend to analyze the cumulative volume delta in a totally different way than the way I analyze it. So they look at cumulative delta, they see the strength, meaning market is going up, so there's a lot of aggressive buying, and they buy with the trend. But this, so what I like to do, first of all, I look for divergences. What I need, okay, is a level, one that we can draw out right over here. Why did I draw out this level? Well, this level has been retested multiple times. Price moved up, back down, moved up again and back down. Price did not break through, and even when it did slightly, it shot back up and it closed above. So this is a very strong indication that this level is in play, and this level will probably be retested and hold again. Here, look what happened, okay? Price came down to this level, which also happens to be a psychological level, 13,180, you know, especially in the Nasdaq. See, price stopped over here at support. Cumulative delta did not. Now here where there's a lot of misconception regarding this indicator. Since price is not correlating with cumulative delta, people think that this will act as a predictor that now price will move lower because there is more aggressive selling. But let's go back to what I said about market orders and limit orders. Big players, okay, control the market, and the big players only use limit orders. So if there's more market orders, you know, more aggressive selling going on, and the big players have a bunch of limit buy orders at this level, they're absorbing that aggressive selling. So what does that mean? That means that the big players are intentionally driving the market higher, or they want to intentionally drive the market higher. So you as a retail trader, would you rather do what the retail traders are doing, the dumb money, or would you rather do what the smart money is doing and look at the cumulative delta? You could call it order flow from this perspective. So when you look at it from this perspective, you would wait, okay, for a candle to close, such as this one, and you would place your trade just slightly above the support. And bam, market moved higher. Okay, now some of you would be happy with this profit. You know, you only need to risk, I never risk more than like 10 points during European session or 15 to 20 points during US session. It depends on volatility. Now what I like to do whenever I enter a trade, such as this trade, I would wait, okay, for an opportunity to scale in. I want to maximize my gains on every trade, and I want to reduce risk as much as possible. So now that I've entered the trade, okay, I will gladly do this live in a future video. I might consider doing live streams also, trading live with you guys. So I would risk on this trade no more than 8 points. Okay, so entered trade long, okay, limit order always. I never enter a trade via market order unless there is an inverted hammer candle or a hammer candle with the close exactly at the level. Now what we want to do is find retracements where we can scale into the trade. So You would want a retracement, a proper retracement, such as this one where price comes lower. You'll add another contract. You'll set your stop loss to break even. So that will be the average price between the first entry and the second entry, which would be around the 183.50 area. You would sell for like a 1:8, 1:9, 10 risk to reward. Obviously, you can opt to not scale in. Your win rates will be higher, but the overall profit will be lower. I'm the kind of trader who prefers high risk to reward strategies over high win rates. From my extensive experience, I've found that the majority of high win rates do not work in the long run. Most of them are fraudulent claims. Most of the traders who claim that they have a high win rate are scammers. There is no such thing as a high win rate in the financial markets. You can place the odds in your favor by maximizing your profits when you're right and decreasing your losses when you're wrong. And I believe that that is the only way forward. It will also help with a variety of psychological issues, such as accepting defeat, which, as I explained in one of my videos, it is paramount. You need to accept defeat to move forward. You cannot revenge trade. You cannot take a trade out of fearing of missing out. You have to accept a loss, even if the loss you took was not one which should have been taken. It's been taken nonetheless, and you cannot erase the past. Acceptance, radical acceptance. Now, I don't want to go in depth about trading psychology, even though it is one of the most vital aspects to become a profitable financial trader. I will gladly create another video on that topic. So I will now be showing you another setup, all right? This time on the short side. Here, cumulative delta made a new high. Price did not breach. So what does that mean? Does that mean that price is going to follow suit? That divergence? That's what many people think. That's what many traders on YouTube tell you to do. In doing that, you are assuming that market orders have more leverage than limit orders, that market orders have more power than limit orders, and that is not the way the market works. So here, after that high, look what happened. What we would have done, again, as I explained, for the long position, with the short position, we'll be doing the same thing. Over here, at this level, okay, we would set our limit order at around 1308, okay? 15 points stop loss. And why 15 points this time? Because this is during the US session, and volatility was relatively higher during this day, as you can see, than other days. People were panicking that the market is crashing, but it's just a sell-off day. There's no crash in a couple of points. So yeah, market tanked. Okay, we got in. We would have scaled in one of these retracements. Okay, and this amounts to like 1:20 risk reward. Okay, and that is an insane return on your investment, on your risk. Now, obviously, if you decide that not to scale in, you'll still have a very good risk reward. So it depends on what your approach is, that determines your profit. Okay, it is important that you have a set of rules that you adhere to. Okay, in every circumstance, in every situation, you can never break them. You can never break even just a single one. You have to stick to all of them, and you need to know yourself. You need to create tailored rules for you. They need to be personal. You need to know how you react to certain losing streaks, to certain winning streaks, and that is even more important, the way you control your winning streaks, because that's where you end up losing a lot of money after having a couple of winning streaks. You get ahead of yourself and you start to take even greater risks, and you become cocky and overconfident. So you need to know exactly what kind of person you are, how you can control yourself better. You set like a particular amount of hours that you're allowed to trade, a maximum number of trades you can take. It just depends on the person you are. I cannot tell you that you should do this and you should not do this. However, I can tell you that if you trade this strategy the right way, you will definitely make money. And if you scale in, you will make a lot of money. Your win rate will be low. Yes, it's only like 30%, but it doesn't matter. It will help you even more, to be completely honest with you, because you'll get used to taking those losses one after another. But then you'll execute again, just as you have been doing for all those losses, and your beautiful winner will arrive. You just keep repeating the process. That's all you have to do. If you liked this video, please like and subscribe. I will definitely be providing more content with which you will definitely become a better trader.